Excellent. Well, thank you all for taking time out today, and thank you for ERP VAR for hosting us, as always. Today we're going to talk about something that not a lot of people really focus on, and that's invoice disputes. And, we do credit collections management software, so we have a lot of expertise and background in helping companies prevent disputes from ever happening. And if you really dig in and look at it, it's actually very easy to prevent the bulk of your disputes, 60% of them or better, from ever occurring to begin with. So I'm pretty excited to be able to talk to you guys today about what we've learned and kind of share some strategies with you. But before we start, I want to set the tone. And this was over on the left, this was my drive-in this morning. We're located in Cleveland, Ohio. It is it's bitterly cold out here. For you on the East Coast joining us today, I can commiserate with what you're going through. And for those of you on the West Coast, this is what we are looking forward to. So we're going to set the tone here. We're going to be happy. We're going to think happy, warm thoughts during the presentation. So without further ado, let's dig in here. Before we get started, I want to talk about AR. A lot of companies don't realize this, but accounts receivable is typically the largest or the second largest asset for most businesses. Your ability to convert your AR to cash faster will have a dramatic increase on your cash flow and your access to working capital. So I think we all know that. That's why we're taking time out today to talk about invoice disputes, because we know that this is a pretty important piece of our business. Let's talk a little bit about disputes by industry. Any business that extends credit terms to a customer is going to have disputes. Now, those disputes are going to vary depending on your particular industry. For example, if you're a distributor or manufacturer, you're going to get disputes that are related to product, right? You sent me the wrong product, it wasn't the right product, it wasn't the right quality of product. So you're going to hear those types of things in distribution and manufacturing. If you're in business services, IT consulting, computer software, you're going to hear disputes around, service rates, or you didn't complete the project, or I still have issues related to this project. So they're going to be really service-driven disputes that we're managing. If you're involved in construction and real estate, you're going to have a different set of disputes and dispute reasons. If you're in transportation and logistics, right, maybe you're a trucking company, you're going to have disputes around freight bills, overages, shortages, different types of fees and things related to your freight invoices. So I just wanted to set the stage here and let you know that our software has been installed across a variety of industries, these and many more. It doesn't matter why you have disputes, we can help you eliminate a lot of them. Okay. So let's talk a little bit about the problem with disputes. The key is to identify the dispute earlier in the collections process. Too often we send out invoices and we wait for the customer to pay us, and we don't address it until it reaches a critical stage. If we can identify the dispute earlier, we can get resolution earlier, we can avoid reasons for non-payment earlier. Okay? And that's going to have a significant impact on our cash flow. Too often businesses send out invoices, and what they do is they wait until the invoice is severely past due before they start calling to find out why. Now, there's really two fundamental reasons why an invoice isn't paid. It's either your fault or it's their fault. It's kind of this blame game thing that we play with each other, us and our customers. There are many times, and in most cases, I'm going to argue, it is our fault as the business providing the product or service to our customer. It's our fault that our customers aren't paying us on time. There are some rare occasions where it's our customer's fault. In the majority of cases, again, it is our fault, and there are things that we can do to avoid disputes. There's strategies we're going to talk about on this webinar today that are going to help you eliminate the bulk of your invoice disputes. The reason why this is important is because an invoice dispute prolongs payment. Now, what happens when payments go out into the future? This is some research that we've done. 26% of invoices that age to 3 months old are uncollectible. If you have disputes that are lingering out there for 6 months, you'll be lucky to collect on 30% of them. And if you have invoices and disputes that linger, again, out there unpaid a year or more, you're going to be lucky to collect 10%. So as you can see, and we all understand this concept, we have to get to it earlier in the process. Couple more points here. Average day sales outstanding, which is basically how long does it take our customers to pay us. Nationwide, industry-wide is 61 days, but on average, we're extending 28-day credit terms to our customers. So it's taking our customers over twice as long to pay us than we're extending credit for. Companies that are implementing software like our Anytime Collect system are typically able to reduce DSO by 10 to 20%. What does that mean based on kind of the industry-wide statistics? That means you're going to get paid an average of 9 days faster, and who wouldn't want their cash, over a week faster? We did actually previous webinars with ERP Bar where we highlighted one customer that they were able to reduce their DSO and get paid almost a month faster. It's pretty amazing story. Couple last points here, and then we're going to dig into the topic of the day. Bad debt write-offs are typical in a lot of industries. Industry-wide, you're looking at about 4% of your AR is typically written off. That could be as high as 9% in some industries that we've seen, and as low as 0 to 1% in some industries. Let's put it in perspective. If you're a $10 million company today, and your industry average 4% write-offs, that means you're writing off $400,000 a year. If you had a system, a process, a strategy, a way to reduce those bad debt write-offs, and you could get even a 10% improvement, that's $40,000 you're saving every year. So again, pretty significant improvement there. So now let's talk about why people dispute invoices. And this was some research that we found. I believe it was CFO.com article in a study that they did. 49% of disputes may be related to missing or incorrect purchase order information on the invoice. That's pretty surprising to me, but it makes sense. There are a lot of companies that require a purchase order number, their purchase order number, to be on the invoice in order for them to pay. So we can easily, that's something within our control. When we're taking the order, we need to make sure that we have a purchase order number. Some accounting systems allow you to require a purchase order for specific customers. Others don't. And if you're using one of those systems that doesn't allow you to do that, our Anytime Collect software has the ability to help you with this process. You can set up a customer and say in the top screen here, we're looking at does this customer require a purchase order on the invoice? Right, so we're using a user-defined field to identify that. And then what we're doing within our software is we're creating this rule that basically says anytime that we bring in a new invoice into Anytime Collect, if the customer requires a purchase order and there is no purchase order number on the invoice, you're going to get an alert. And it's going to tell you this customer requires a purchase order and it's missing. So we're going to help you identify that early in the process. We just saw 49% have some relation to a purchase order. This is just one little piece that we bring to the table that will help you potentially eliminate that altogether. Make sure you send the invoice. That same study said that 11% of the respondents to their survey claimed that they never got the invoice. And I know how it is. If you're smaller company, you're too busy in day-to-day business, you're providing product and service, sometimes you forget to do things. And we certainly did that when we were much smaller. We certainly don't do that today. So a lot of accounting systems have ways that you can automatically send the email to your customers. They call it document transmittal in some of the systems. Some businesses, you could do it via EDI, electronic data interchange. But there's a couple things here that you can do to make sure that the invoice got sent. One is to set it up in your accounting system. Another way is to send it to multiple contacts. So you may have, the accounts payable contact at the organization. You may want to send it to both the buyer and the approver, or the person responsible for payment. This is especially common if you get into parent and child organization structures where I'm selling a product or service to a subsidiary, but I'm billing the corporate parent. Why not communicate with both the person that approved the purchase as well as the person responsible for payment? And then send the invoice through different avenues, right? There's nothing saying that you can't send the invoice multiple times. Send it via email, send it via fax, send it via mail, send it through EDI, send it through all four. Then they can never say that they didn't get the invoice. And trust me, I used to do collections, and I know that's the #1 excuse, maybe outside of that missing purchase order. Send the invoice faster. We run into companies all the time, especially smaller ones, that process invoices, maybe once a week, sometimes every 2 weeks, sometimes once a month. Well, what happens if I'm extending net 30 terms to my customer, and if they're at the beginning of this process, right? So it takes me 2 weeks to actually send them the invoice. They have net 30 terms. That means they have 2 weeks left to pay me. Now we have to actually get that invoice to them. If we're doing it via the mail, that takes a couple days. It's going to go into their mailroom. If you're dealing with a larger business, it's going to have to get sorted. It's going to have to go to the person's desk. They're going to have a backlog of mail that they need to dig through. They're going to need to look at it. They might need to contact people to approve it. Then they actually have to process it, cut the check, and send it in the mail back to you. There's a good chance if you're only doing invoicing every 2 weeks and you're offering that 30 terms, that your customers don't have enough time to pay you in 30 days. So what we suggest is that you try to get your invoice out as fast as possible, daily or at a minimum weekly, and that's going to help you significantly. Statements. A lot of companies send statements to their customers, but what we found is that a lot of companies don't. It used to be pretty commonplace that a business would send their customers a statement every month or every so often, along with the invoices. There's no excuse for us not to be able to do this today, especially with email being so prolific. So what we suggest is that you send the invoices, again, immediately as soon as you process them in your accounting system, but then also send them a statement. There are some companies that will pay off a statement as opposed to paying off an invoice. The huge benefit here is if you're using it via email, there's really no cost to automate this for you, and it's one more way for you to get paid faster. Verify all the information around getting the invoice to your customers. Step #1, don't wait to talk to your customers until they buy something, or heaven forbid, until they're past due. Stay in contact with them, even if they're not buying something, even if you're not the salesperson. Call them, find out how they're doing, find out why they're not buying. What this is going to allow you to do is to build that relationship with your customers. It's also going to allow you to identify things that may change. Maybe they moved, and if you haven't sold anything to them for 6 months or a year, suddenly they go buy something, you're sending an invoice to the wrong location. Maybe one of your key AP contacts left. Stay in contact with them. You'll know this. That way you can avoid sending the invoice to the wrong person. Verify that you have the right email. Maybe they got acquired and their email address has changed. Get the emails for everyone that might touch this process. The person responsible for buying or approving the product and service, and the person that's responsible for making the payment. Maybe even their supervisors. You might want to have the CFO or the controller's name and email. And send the invoice to the right person. Make sure you have it to the right address. I mean, these are all things that are well within our control. Sloppy invoices. We see this quite often as well. Sloppy is good if you're reading a sloppy Joe. Sloppy is not good if you're trying to understand an invoice. Do not use the template invoices that come with your accounting or ERP system. They are notoriously bad. What we want to do is we want to make sure that the invoices we send to our customers are extremely simple and easy to understand. Are they easy to read? Are we using the right font? Is it very clean, lots of white space? Do we very clearly define the due date? We've seen some invoices that go out where they simply put in the invoice date and they put in the customer's terms, and then they expect the customer to figure out when it's due. Why not just put the due date right on the invoice? Make sure that you include your remit to address. So we've seen invoices before that didn't have the remit to address on it. Completely baffles us. Include the contact information for claims, disputes, and questions. So they know if they have some sort of an issue with this invoice, that they know who to call, right? Put in your direct number, extension, or direct email into your credit and collections department. You know, and the last piece here, it's pretty easy. Talk to your customers, especially your bigger customers, and say, hey, you know, what do you think about our invoices? Are they easy to understand? Is there anything that we can do to change the invoice to make it easier for you to process payment? You'd be surprised sometimes at the little things that you can do that will help you get paid a lot faster. Call your customers. That study we were talking about earlier, 27% of the executives surveyed said that their customers didn't pay on time because of one or two reasons. It was either because they didn't have the money, or they did not, the business did not have time, or nor did they successfully contact the customer. Now, 27%, and there's kind of two reasons there. My gut tells me, based on our experience, that more often than not, the customer has the money. We just simply weren't able as a business to communicate effectively with the customer. How can we do this? What we can do is we can automate a lot of the things in our AR process, so that frees us up to make more phone calls so we can spend more time talking to our customers. And I want to share this statistic with you. This is from a company called PayStream Advisors. They're an industry analyst group that monitors the AR and AP world. And what they found was most companies have this kind of traditional collections methodology and strategy, which in essence is an Excel spreadsheet, an aging report, a pack of highlighters, and kind of the will of God. And what happens in this manual process is that they're spending only 20% of their time soliciting customers for payment, because they spend a lot of time trying to prioritize who am I going to call, digging up information on the invoice, on the contact, on the history, on the account, before they even make a call. What this is going to allow you to do, if you automate a lot of these processes, is to spend 62% of your time soliciting your customers for invoices. It also allows you to spend a lot less time trying to remediate invoice disputes, because you're identifying them earlier in the process. Number 8, incent your customers for on-time payment. Pretty novel idea here, right? We need to incent the right behavior. How can we do this? The first one is an option. A lot of people utilize this. It's a late payment penalty. I don't personally like this. I don't find that it works real well, because this is what it's going to do. I have a customer that doesn't pay me on time. I give them a 5% late fee or some dollar amount late fee, and then they're just not going to pay me. And now I'm pushing that invoice out further and further into the future. I have less and less of a chance of collecting on it. And in 60, 90, 120 days, I'm going to call the customer and say, you know what, just pay me and I'm going to waive the payment penalty. That's what's going to happen. So I'm not a big fan of payment penalties at all. It does work in some industries, but I personally just don't like it. I would rather give the customer a discount if they pay me earlier. And I can justify this with my customer, because if I don't have to spend as much time trying to get payment, there's a lower cost to me. If there's a lower cost to me, I can give you a better price in respect to a discount for early payment. So I tend to really like that second option there from a strategic point extremely well. The other thing that we need to do, and this is going to vary depending on your industry. And if you're in food and beverage, I'll give you an example. Typically that's like a net 10 day terms in that industry, because you're dealing with perishable inventory. And in that industry, net 10 does mean net 10, right? And customers tend to pay you on time. In other industries we get into, especially in like services, computer consultants are notoriously bad. They offer net 30 terms, and they're perfectly happy with getting paid in 90 days. Quite frankly, I don't know why, but the terms are a little bit looser, depending on the industry. But here's my philosophy and what I suggest to all our customers. Identify the terms that make sense for you and for your customers, and then stick to it. Net 30 means net 30. It doesn't mean pay us when you feel like it, right? We're a business, not a bank. It's not our job to finance you. The other thing that we suggest is to stick to a credit policy. Identify what you want to happen. What are the repercussions if customer doesn't pay us on time? And follow this methodology. Send reminders out. Call when they're past due. Send past due notices. Call early and call often, and let them know what are the consequences. If we don't get paid in full by this date, what's going to happen? Are we going to freeze your account, put you on credit hold? Are we going to send you to third-party collections? What exactly are we going to do, and what is going to be the impact to your business? Last point here, some of the strategies is be creative. This is kind of a grouping. You can implement online bill pay, and a lot of our customers do. We actually just made this available within our software. If you're dealing with smaller dollar invoices, $100, $500, does it really make sense for you to spend a lot of money, a lot of time, and a lot of energy chasing down non-payment? Make it easy for them. Send the customers a link in an email. Let them click it. They can log on automatically to a online bill pay portal, and they can pay their bill with a credit card or ACH. Now, in some industries, I do understand we have a couple customers that are $200,000 invoices. You don't necessarily want to enable credit card payment there because of the fees. ACH is probably the better way to go there. The other option is maybe allow them to make payments via credit card only if their account gets to a certain stage in the process. If they're over 120 and your chances of getting paid are diminishing, it's better to take a credit card than to not take a credit card. I'll give you an example from the real world. We had a situation with one of our customers, and they told us point blank that they didn't have the money. It was a very large bill that was outstanding, and we said, you know what, do you have a credit card? We'll take a credit card. And they said, yeah, that's fine, because that gives them a little bit of a float to actually catch up on their cash flow. So we took a credit card. Granted, we got a pretty big fee on processing that transaction, but at that point, it's better to get something than nothing at all. So consider different ways to get paid or to avoid something that could be even a worse situation. If you're a distributor or manufacturer and you're sending product to the customer, and for some reason they're not paying you, maybe it's a cash flow issue, there's nothing saying that you can't ask them to return the product. Maybe they've used some of it, maybe they haven't. I sent you 50,000 of this item. You say you have 20,000 left on the shelves. Return it. We'll credit you back for it. We'll pay the shipping. It's better in some cases to be able to get the return and get the product back, which has the value, than to simply write off everything and let the customer sit there with your assets. This is another one, creativity. We have a couple customers that do this. If I have a customer that isn't able to pay me, but maybe they have a product or a service that would be of value to me, let's barter. You owe me $20,000. You're a business consultant. Why don't you come in and give me $20,000 worth of business consulting? Or if you don't have anything that I necessarily want, maybe you can make referrals to me. You know, I'm just saying, throw something out there, be a little creative, try to make the best out of a bad situation. Come up with payment plans. This is always a good one. You know, you're late, I understand you're having some cash flow problems, you're a great customer, you've historically always been a great customer. We're going to work with you. We're going to work to get you through this. We had a customer a number of years ago that was in the automotive industry, and they were hit pretty hard. They were a Tier 2 supplier to one of the big three, and when the big three filed, actually two of the three filed for bankruptcy, suddenly they took a pretty hard hit, and they didn't have cash. So we were able to work with them as a very good customer, very loyal customer, on a payment plan that made sense to get them through a very difficult time. The automotive industry recovered, and they're still to this day a very good customer for us. And the last point here is just negotiate. You know, in a lot of cases, your customers feel bad if they're not able to pay you. Negotiate with them. Maybe even recommend that they look at Anytime Collect. If they're having cash flow problems, we can help them out. If they have healthier cash flow, you're going to get paid faster. So kind of a summary around these 9 points, and I know we covered a lot here in a little bit of time. Identify the underlying problems, right? There's always a problem for non-payment. It's going to be your fault in most of the cases. In some cases, it's going to be the customer's fault. Let's do a root cause analysis, find out what happened, and then let's go and resolve that and prevent it from happening again. Let's automate what can be automated. There's no reason for us to manually go in and have to send invoices or to send statements or to send reminder letters when there's technology out there today to do that for us. Let's prevent the issues that are within our control. Let's make sure we're sending the right product, right quantity, right grade, et cetera, or providing the right service, billing them the right hourly rate, et cetera. Let's make sure we have the purchase order on the invoice. Let's make sure that the invoice is accurate, it's easy to read, it's delivered on time and to the right person. And then let's make it easy for the customer to pay us. Let's call early and let's call often. Let's establish a credit policy and establish a process that we're going to go through to get paid. So that's kind of the topics that we wanted to cover on invoice disputes. Now what I'm going to do is share with you just a few seconds on Anytime Collect, which is the accounts receivable management software that we sell. There's really a couple components to it. What we can do is we can automate a lot of your email communication. We can standardize your messaging with mail merge documents, stunning letters, collection letters, past due notice letters, email reminders. We can build a prioritized list of the people you need to call based on the data we're pulling in from your accounting system. We give it to you all in a centralized location, so you're not having to go into email to send an email or to review what's happening. You don't have to go into your accounting system to look at an aging or to look at the invoice detail, and you don't have to go into a CRM system to get contact information. We're putting everything together in one place for you. We have, obviously, a big piece of this that we talked about today is dispute management. We can identify invoices as in dispute, the amount that's in dispute. We can put reason codes on it to drill into a kind of a root cause analysis. We enable cash forecasting. We enable online customer payments. And we give you a lot of business intelligence to help you get even more information so you can make better decisions around your credit collections process. Just a couple screens here. This is one of the dashboards. So we can identify where are we at from day sales outstanding. Are we trending up? Are we trending down? How long is it taking customers to pay us? Et cetera, et cetera. We can see all of our accounts. This is information we're bringing over from your accounting system. We can identify their aging. We can drill into invoices and just get a better picture of what's happening with our customers. From a communication standpoint, we can track anything that you can imagine within the software. Emails we're sending to our customers, emails we're receiving are retrieved back in, disputes, follow-ups, phone conversations, expected payments, broken promises, all of this in one place, and we can see this all on one screen. Email templates, you can set these up. You can have the system automatically send them out, or you can use it as a shortcut so that when you're manually creating an email to a customer, you don't have to start from scratch. You can use a template really as the basis to begin that conversation. This is great if you have multiple collectors because you can standardize your corporate messaging, and it makes it a lot easier on your collectors. What we found is a lot of people have different personalities. So I might have somebody that's very abrasive in collections, and I might have somebody that's a little too nice. By setting up a corporate policy, a corporate template, it puts everybody on the same page, and we're getting across to the customer what, from a corporate standpoint, we want conveyed. We can create all the communication. This is the screen where we do it all. Set follow-ups, look at the invoices, create emails, and make phone calls. Online payments, this is the payment portal. We actually enable you to send out a link. The customer clicks the link. It logs them in automatically to the portal. They can retrieve PDF copies of invoices, and they can click which ones they want to pay. They can click the Make a Payment button. It takes them out to a site that's PCI compliant where they process the payment. They can also communicate with you and your credit collections department from this portal, which is also a really nice feature. So what can you do with all the money we're going to save you, avoiding all these invoice disputes? Some suggestions for you. Donate it to a charity. We happen to really like the Save the Children Foundation. It's one of our favorite ones we work with. Give your employees a bonus, or go out and recruit or retain talent. Lower your prices. Beat the competition. If you're lowering your costs, pass it on to the customer. Invest in your business, invest it in marketing, invest it in capital equipment, and make your business better. And the other option here is keep it for yourself. If you're the business owner, you work really hard. You've taken a lot of risk in your business. There's no reason that you can't keep that additional savings and go someplace nice and warm, especially if you live in Cleveland and it's a day like this. So just to wrap up, we do have a number of resources that are available to you. The webinar we did today, there's a white paper that goes into much more detail. It's how to eliminate accounts receivable invoice disputes and get paid faster. So that is available. I've sent that link over to, actually the whole document over to ERP VAR, and I'm sure they'll be sharing that with you. We also have a couple other white papers that are available, 6 steps to developing a world-class business credit policy and collections action plan. Another one, how to develop killer AR collection templates, letters, call scripts, and email templates. 17 things you should be doing to reduce outstanding accounts receivable. One that is also very popular, how many employees do I need for effective AR management? And we do also have a free business credit application template available to you. So lots of resources that will hopefully kind of round out the discussion we had today just on the dispute side. So I'm going to encourage you all to take the first step. I personally really like this quote. If you don't know where you're going, you probably will end up somewhere else. A lot of the resources that we shared will help you identify where you want to go, set some goals, build some strategies in and around every aspect of AR management, disputes included, and we can get you to where you want to go, and that's a very profitable organization. So with that, we're going to conclude the webinar. I'm going to kick it back over to Adrian, and then we'll open it up for some questions.
Thank you so much, Jim. That was a great presentation. I'm going to go ahead and launch a poll while we're asking some questions here. And again, if you do have questions, please go ahead and click on that question mark button right next to your name on the webinar pane. And a dialog box will come up where you can indicate your question manually. And if you could just take a moment to answer this question, that would be great. Are you interested in learning more? And Jim, what ERP systems does this integrate with? Do you have an interface with ERPs?
We do. Yeah, we integrate with pretty much everything out there that's possible. We have direct integrations to into QuickBooks. And that's both the desktop and the online version, and Enterprise, Pro, Premier, whatever they're calling them these days. We do also have integrations to Sage 50 US, which is the former Peachtree product from Sage. Sage 100, which is Mass 90, Mass 200, Sage 300, which is ACPAC, Sage 500 being Mass 500. On the Microsoft side, we integrate with Microsoft Dynamics GP, Epicor, ERP, also known as Vantage or Epicor 9 or 10 is forthcoming. For any other ERP application or accounting application out there, we have a generic interface that we've used. We've integrated with a lot of the Infor products, such as like MX Trend, SX Enterprise. We've also integrated with Macola, and really a number of other ERP systems, SAP, Oracle. So yeah, we really don't have a problem getting the data out of the system, especially if you can get the data out to a CSV flat file that we can map to.
And what is the typical cost of this system?
That's a good question as well. And the pricing scales, we do have 3 editions. For a QuickBooks customer, we have a very basic edition because what we found is the QuickBooks market, they don't have a lot of these more advanced requirements. So on the QuickBooks platform, you could go with our QuickBooks edition. That starts at $50 per month, which is really, really inexpensive. If you are QuickBooks or maybe using one of the mid-market ERP products like a Sage or a Microsoft solution or Epicor, our standard edition has a little bit more functionality. That pricing is $150 per user per month. On subscription, we do also have purchase available. And then we have an Enterprise edition, which is typically for larger companies on SAP or Oracle, maybe JD Edwards. That is available either subscription or purchase. I guess if I'd have to give you an average, I'd say that most companies that are subscribing to the software are looking at an investment for the software of maybe $1,000 to $2,000 a year, to get started. If you're looking to buy it outright, your investment is probably more in the $5,000 to $10,000 range. Again, depending on the number of users and the modules. So hopefully that helps. From an implementation standpoint, the implementation is pretty simple. On the low end, it can take a matter of hours to get you configured on QuickBooks. If you're more of a mid-market company and we're doing a little more setup, a little bit more work on the rules, the reports, the templates, that can take anywhere from a day to maybe up to a week. And if you're an enterprise customer and you've got a lot of requirements, we're typically going to be under a couple weeks. And in that space in the market, our competition is typically taking several months to do an implementation. So we've tried to make it as easy as possible to learn how to set up the product and to use it.
I'm not seeing any other questions. So just remind the audience, if you do have a question, please go ahead and click on that question mark and indicate your question in the dialog box. And please note Jim's contact information on the webinar screen. You can reach him at 440-352-4700, extension 229. And I'm going to send a copy of this recording out to all the registrants for this webinar today as well, and the PowerPoint slides. And we just thank you so much for joining us. Jim, would you like to close it out with any other comments?
No, not really. I mean, I just hope you guys got something out of it today. I think for me, the big takeaway when I was preparing this presentation and when we were doing the research on the disputes is that in most cases, these are things that are well within our control that we can eliminate, and there's no reason not to. If you look at different industries, manufacturers are pretty notorious about improving quality. It's no different when it comes to managing accounts receivable. So let's, take some time out of our busy lives and make it a priority to be more effective in our accounts receivable. At the end of the day, it's going to have a tremendous benefit and impact on our cash flow and on our organization as a whole. So yeah, I encourage you to just take some time out, make it a priority. If you have any questions, reach out to us. We can help you. We can give you the additional resources, whether you're looking to buy our software or not. Our goal is to make your business more successful. And if we can do that by just sharing some knowledge, this was time well spent today.
Thank you, Jim. Thank you, everybody. Have a great day.
Bye-bye.